Hello everyone, welcome to my video presentation. Now I talk to you about the overview of the last monetary policy declared by Bangladesh Bank. At first I introduce the monetary policy and fiscal policies. Monetary and fiscal policies are essential tools used by government and the central bank to manage economic stability and growth. Uh, this these policies aims to achieve macroeconomic objectives such as controlling inflation, managing employment level, and forecasting sustainable economic development. This assignment focus on the latest monetary policy declared by the Bangladesh Bank, analyzing its key component, comparing it with previous policies, and suggesting the potential reform. Summary of the last monetary policy declared by Bangladesh Bank. The last monetary policy of Bangladesh Bank, announced on October 22, 2024, focus on combating high inflation, and here this key point. First of all, policy rate increase. The central bank raised the key policy rate by 50 basis point to 10%. This is the fourth hike this year and the 11th since May 2022. Second, inflation control. The primary goal of the rate hike is to tame inflation, which has been persistent issues. The higher borrowing costs are intended to reduce the spending and slow down inflation. Third, economic stability. These measures are the part of broader effort to stabilize the economic amidst rising global energy and the commodity price. This policy aims to balance economic growth with price stability, encouraging that inflation does not erode the purchasing power and the economic stability. Then, significant change compared the previous policy. The latest monetary policy of Bangladesh Bank, announced on October 22, 2024, introduced the several significant changes compared to the previous policy. Here the key difference: 1. Policy rate. Previous policy, the policy rate was 9.5%, and current policy, the policy rate has been increased to 10%, making a 50 basis point hike. Second, inflation target. Previous policy, the inflation target was at 6.5%, and current policy, the inflation target remains 6.5%, but the central bank has emphasized a strict measure to achieve this target due to rising the global price. Third, the reserve requirement. Previous policy, the cash reserve ratio CRR was 4%. Current policy, the CRR has been increased 4.5% to liquidity in the banking system. Credit growth. Previous policy, the target of private sector credit growth was 14.8%, and current policy, the target has been revised down to 13.5% to curb excess to borrowing and spending. Fifth, the foreign exchange reserve. Previous policy, the foreign exchange reserve were around $35 billion. Current policy, the reserve has slightly decreased to 34 billion, reflecting the impact of global economic condition. This change reflects Bangladesh Bank's ongoing effort to manage inflation and encourage economic stability amidst challenging global economic condition. Then now I talk to tools used by Bangladesh Bank. Bangladesh Bank employs several tools to implement its monetary policy, aiming to control inflation, manage liquidity, and ensure economic stability. Here are the main tools, their details. First, the policy rate, repo rate, the rate at which commercial bank borrow money from the central bank. As of the latest policy, the repo rate is set as 10%. Reserve repo rate, the rate at which central bank borrow money from the commercial bank. This rate, typically lower than the repo rate, encourages banks to lend more. Second, the open market operation, the treasury bill and bonds. Bangladesh Bank buys and sells government securities to regulate the money supply. For instance, the central bank might sell treasury bill to absorb excess liquidity from the market. Bangladesh Bank bill, the short-term bills 7 days and 14 days and 13 days issued by the Bangladesh Bank to manage short-term liquidity. Third, reserve requirement, cash reserve ratio, the present of the bank total deposit that must be kept in reserve with the central bank. The current reserve ratio is 4.5% up to 4% in the previous policy. Statutory liquidity ratio, the percentage of the bank net demand and time liquidity must be maintained in the form of liquidity asset. This ratio helps ensure banks have enough liquidity to meet their obligations. 4. Discount rate. The rate at which commercial banks can borrow from the central bank against approved securities. The rate inflation the cost of borrowing and lending this economy. 5. Succession. Moral succession. Bangladesh Bank use moral succession to preserve banks to adhere to certain policies to guidelines without formal distractives. These tools are used in combination to achieve the central bank's objective of controlling inflation, managing liquidity, and supporting economic growth. For example, by adjusting the repo rate, Bangladesh Bank can influence the cost of borrowing, which in turn affect the spending and investment in the economy. Reform needed in the monetary policy. First, exchange rate flexibility. Current situation. Multiple exchange rate create market uncertainty and discourage foreign currency inflow. Reform. They implement a single market clearing exchange rate regime. Second, the standing financial sector governance. Current situation. High level of non-performance loan. Governments issue in the banking sector. Reform. Enforce strict regulation and oversight to reduce the NPLs for interest, reducing the NPL ratio below 8% by 2026 and encouraging good governance and state-run bank. Implementing the prompt corrective action framework address the financial sector valuability is also crucial. Third, monetary policy adjustment. Current situation. Persistent inflation and liquidity management challenge. Reform. The continue tightening monetary policy to control the influence include adjusting the policy rates and reserve requirement as the needed. For the example, recent increase in the cash reserve ratio for 4.5% in step in the right direction. 4. The digital financial service. Current situation limited interoperability and use the experience in the digital payment. Reform.